Welcome to Financial Opportunities Uncovered, our first video podcast and our 50th episode overall. Our producer tells us that 90% of podcasters don't make it past 50, so we're on a roll here. We nervous? We looking good?
Great.
I don't know about looking good, but we're
Feeling
I
good.
spent 2 hours in hair and makeup. These guys, they just came as they
Showed
were.
up. Yep.
So we're about halfway through the year, and we thought it would be prudent to reflect back on the year so far, what analysts were saying coming into the year. We knew it was a midterm election year. Analysts were pretty bullish, maybe a 10% return for the whole year and beyond that even. So far, what are we seeing?
So a lot of the talk this year has been inflation related. So, I think that was a big thing going into the year, and it's even bigger now. And sticky is the word that we're hearing with inflation. So we've seen an uptick in inflation. I think we're at about 4.2 now.
Yeah.
So a little bit higher than I think where we thought we would be. And a lot of that is just from the war in Iran with the energy prices increasing.
And we were at 2.2 in February, so pretty close to the Fed's target of 2%, which my 20-year-old son says is pretty aggressive.
Right. Yes. So. Yeah. So it's kind of where do we go from here with inflation, I think is the big sticking point right now and big talking point. So, that delves into the Fed and what the Fed's going to do and things like that. But I think we're kind of at peak is our thinking is peak inflation, with the war likely coming to some sort of conclusion here in the coming weeks. I think, we're seeing energy prices start to decrease. And so that's a big caveat of the inflation number.
Gotcha. And we have a new Fed chair. So, any thoughts on that, Mark?
Yeah, and he was kind of put into place with the idea that he has a bias towards lowering rates. We'll see how successful he'll be at actually executing that. He's sort of in a hard place where data's not really suggesting that they lower rates necessarily, not really raising them either. I think they're just kind of stand pat is probably what I would expect them to do over the next couple of meetings at least. So we'll see how that goes.
Yeah, I think the thought process is it might just kind of resolve itself. If the energy prices start to decrease, inflation will decrease. So I don't think they're ready to make any major moves because it might kind of resolve itself.
So oil prices are down maybe 20% off the peak.
Yeah, it's kind of a daily thing.
Yeah.
They're on again, off again with headlines. So it might be creeping back up again with some of the things coming back online. But the other part of inflation that was getting a lot of conversation up until last year was the housing component of inflation. And part of it was because the way they get that data is old. And so it's how old is that information? But I would say generally speaking, most people looking around are seeing that home prices have kind of leveled off, if nothing else. So that should start making its way into the data as far as not pushing inflation higher. That's why I think the energy part is being more of the conversation.
The bigger piece. Yeah.
So as I said, heading into the year, analysts knew it was a midterm election year. Midterm election years typically bring higher volatility. But year to date, the S&P 500 is up around 9%. We were down 9% at one point when the war started. So really up 18% from the low point. Does that strike you as better than expected?
I mean, I guess just broadly speaking, that's ahead of schedule in any given year.
Right.
If you say, depending on your time frame, the market averages somewhere plus or minus 10%. So if you're already at that halfway through the year, you're already ahead of schedule. In midterm election years, what you more often see is the market more or less stays flat for most of the year, waffles around as headlines get more volatile, and then after the elections are over, regardless of what the outcome is in those elections, you see a lot of return in the back end of those years.
Yeah.
So when you think about that, and already being at 9 to 10% midway through the year, we're even more sort of ahead of schedule as far as that's concerned.
Right. Yeah, and I think we've been telling everybody we talk to, when we look at the past decade and a half, it's hard to sustain these double-digit returns year over year. Yeah. So not that we thought it would be a bad year in the market, but I think we're ahead of schedule from where we kind of thought we would be.
Yeah, I think the market has averaged about 15% for the last 17 years. And as Mark said earlier, the long-term average is about 10. So overshooting that average by 50%.
Yeah, year over year.
You can't do that forever. So we're gonna dig into the midterm elections in depth in our next episode. One of the hot topics of late has been the IPO market. SpaceX went public about 2 weeks ago now, a week and a half ago. So clients are asking us, should I invest in SpaceX? And I thought I would share some data, historical data, on some of the IPOs that have gone public in the last maybe 5 or 6 years. So between 20 and 2021, there were 3 companies that went public: Coinbase, Roblox, and Snowflake. All of them were highly acclaimed. But what typically happens in an IPO is either the market prices, they kind of set a starting price, sort of like a starting bid in an auction.
Right.
And in theory, that starting price is based on the fundamentals of the company. This is what we think this company is worth per share. But oftentimes what happens is by the time that stock is actually trading on the market, it's well above that initial set price. In all 3 cases, so again, between 2021, 3 companies went public. 2 of the 3 are down between 20 and 50% since that time, and 1 is flat. So here we are looking at, and the stock market's up about 170%. So you do the math. Which would you rather be in? Obviously, investing in an IPO sounds sexy. It's great golf course talk. But if we're trying to make money, you could just stick it in the S&P 500 and let it go. So SpaceX, they priced their shares at 135.
Right.
I always believe the insiders in the company get that price before the market opens. Market opens at about 150, and we're trading at or slightly below
Right
that,
around there, right.
Right now. Now, it's only been 2 weeks. However, when you look at the fundamentals of the company, there are some potential strengths. So Mark, if you wouldn't mind, share some of the things. What's their business plan?
Yeah, I guess to back up a little bit, and we were talking about where the market is so far for the year. The AI trade in general is a big part of that. One of the AI strategies we use in some of our clients' accounts, for example, is up 40 to 50% year to date. I think it's almost 100% in the last 12 months. Wow. So that's great, but like we were talking about, you can't just keep on those paces forever. But the AI story and theme kind of spreading across the market is a big factor when you're talking about the prices of some of these stocks, because the earnings growth is really strong. So even being ahead of schedule with the S&P, on a forward price to earnings ratio perspective, it's actually cheaper today than it was at the start of the year because earnings are growing really fast. So what you're seeing is a lot of capital being raised either in private markets or public markets to try to get a part of that growth or stay ahead of that growth. That's where you're seeing a lot of the Mag 7 stocks are issuing debt kind of for the first time in a large way, because they're building out so much stuff and trying to
data centers, for example.
Yeah, they're trying to race towards being the first ones to kind of have the capacity for all this stuff. So I think that's part of the IPO conversation too, is really trying to raise a large amount of capital to do different things that they're growing into. And so obviously when you're trying to raise as much capital as you can, you want that share price to come out to market as high as possible, as any company would. So that's definitely part of it. SpaceX has a lot of different things going on, and a lot of them are very good revenue drivers. So they have, part of it is their satellite network that they've built, which is dramatically larger than anybody else. It's really magnitudes larger than the rest of their competitors at this point. And so they have their Starlink system with that, which I think could be a game changer in a lot of different ways. People are already using it on their flights, to different places. They're using it in conflicts overseas, all of these different things. So that'll make a big difference. Obviously, they're launching systems and how they're putting up rockets into space on a regular basis. A lot of that stuff, I think, will change not only the economy, but just sort of the way we do things as a global race, really. Whether that means their stock price should be trading at this price or not,
right.
That's a different
story, right?
But they are significant things that are going on.
Yeah.
Another interesting part of SpaceX was early in the year they folded xAI into SpaceX. So xAI, which was a combination of what was Twitter, turned into X, and then the AI component with their Grok AI tool that they've been developing. So they had that entity merge into SpaceX, which is really not a positive from a financials perspective. That's a very debt-heavy entity, so it looks better for xAI to be as part of SpaceX, but it's sort of dragging SpaceX back maybe a little bit from some of its profit driving.
I think the AI is a big topic, obviously, this year. I mean, that's been the main driver of so much of the market growth, and not only US-based, but also internationally. So international markets are getting a really big bump from the AI space, too. I read somewhere that I think the top 10 holdings in the S&P 500 now make up 41% of the market. So
and that's
really
not all that uncommon, right?
Sure.
Over the last 30 years, there's always been
the concentration. I think it just leads people to want something different, though, and I think that's where AI has really helped because it's somewhere different than the Mag 7s. And it's panned out, obviously,
and
very
international's
well.
different.
Correct.
And small caps are popping
So
this year.
diversification is kind of the main player this year, I think.
Even outside of AI, definitely the biggest theme, the biggest driver in the markets right now. But when you strip that out, the Mag 7 stocks are basically flat as a whole. Some of them are negative on the year. So those have been the stocks everybody's been chasing for the last decade. But then the rest of the market is really doing fairly well. Small caps, like you mentioned, value stocks doing pretty well this year, international emerging markets especially. Now that's probably also an AI story because you have Taiwan Semiconductors, biggest part of that index. But it is good to see what in the industry we'd call breadth in the market, meaning that it's not just those 5 stocks doing well, but the rest of the market is doing.
So coming back to SpaceX real quick, so there was an article in Barron's here recently, and frankly, there's an article in pretty much every newspaper these days about data centers and the fact that communities are up in arms about building data centers in their communities. But SpaceX, Elon Musk, has a dream to put data centers in outer space. How can you say no to that, right?
I think, like you said, the sentiment has really shifted on the data centers from the public not wanting them. It's something we should ask one of our local city officials.
If only we knew somebody.
But they're weighing what are the economic benefits to us having this massive facility. They're not employing local people here. They're potentially
noise, pollution,
polluting various different ways.
Energy usage.
They're net negative. I mean, they're cash flow negative now too. They're not producing kind of where they thought we would.
So they're not feeding taxes back to the community. So I have seen some cases, at least here in Ohio, where those have been kind of being pushed out into areas where there's basically no population, and maybe better access to water supply and things like that. So that's one avenue, but you're going to run out of that space after a while. So going up into orbit, I guess, is another avenue. Maybe that helps with cooling too. It's pretty cold up there. But you have obviously the distance factor and how do you translate all that. So in theory, it sounds very intriguing, and I think a lot of folks will be interested in that. Execution is, that's always a risk with some of these different things. Can you pull it off? And
certainly not in a quick turnaround time. It's certainly not
and
going
coming,
to be fast.
Coming back to the actual share price of SpaceX, all of this information is public information that's been out there for months, maybe even years. So the fact that analysts felt the stock was overvalued based on all this information at 135. One wouldn't necessarily expect this thing to go to the moon.
Right.
No pun intended.
Maybe Mars, but not the moon. It's currently sitting at about 100 times their sales. And if you, just to put that in perspective, NVIDIA, which has also been a very high growing stock, is about 20 times.
Wow.
So does that mean, again, that there isn't room for the stock to go up over the next decade?
Just a hard hurdle to jump.
It just makes it tougher to justify those valuations. And We will see. Like I said, there's a lot of significant things that they're doing. Nobody's denying that.
Yeah.
But stuff happens, and competitors that aren't significant players now come in later on, and that's just the way the market works. And so I think that's always been our philosophy over time. We talked about that concentration the S&P has. Well, that concentration turns into a different concentration 10 years from now.
Yeah.
But if you're a diversified investor, you're going to have that new basket of stocks too. So that's been our approach. Don't hitch your wagon to just one of these individual stocks.
Yeah.
Too much can go on.
Definitely.
Well, Mark and Abby, thanks for joining us on our maiden video voyage, and we always thank our listeners for watching. If you'd like to connect with us, you can connect with us on LinkedIn or send us an email at info@knwealth.com.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations. It is only intended to provide education about finance, tax, retirement, and related planning topics. To determine which investment strategies are appropriate for you, consult your finance, tax, or legal advisor prior to implementing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal. Please seek advice from a licensed professional. Keeler and Nadler Family Wealth is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Keeler and Nadler Family Wealth and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Keeler and Nadler Family Wealth unless a client service agreement is in place.